Is the U.S. housing market in just the opening stage of a 5-year crash in pricing? Comparing the last peak and subsequent 5-year price decline to this peak, it's easy to see how we could be at just the beginning of the largest home price decline in U.S. history. But if we look at almost any other metric, we can see right away how this housing market is nothing like the housing market of 2007 and 2008. Look at active inventory, which was actually climbing while prices were climbing last time around, peaking at 4 million units. Pricing didn't stabilize until housing stock was down to 2 million units, but look at today. Today, we're south of 1 million units. Even if we get back to 2, we'd still just be at price stabilization levels. Or unsold inventory, measured in months supply, which again spiked as prices were growing. We almost always had 8 months of supply on the market while prices were dropping, even getting as high as 12 months, a full year's worth of supply, unsold and sitting on the market. Pricing stabilized when unsold inventory fell to between 4 and 5 months, but again, look at today. We're at 2.5 months supply. Another metric demonstrating that we'd have to double unsold supply just to get to stabilization levels. So what is actually happening in the US housing market? In this video, I'm delivering a much needed reality check on what's actually happening right now. And I'm using the most recent data available, which is the Redfin weekly report available for your own perusal at redfin.com/news. Let's get right into the data. The headline metric, of course, is this week's median sale price, which came in at $366,200. This represents a 2.6% year-over-year decline, and we'll see this decline grow as we get into the summer. But also note the median sale price has actually been climbing since mid-February. Now here's the thing. Price growth in the spring is totally normal. Housing has an annual cycle in which the spring and summer are more active, see more transactions, and see pricing climb. Then in the fall and winter, volume drops and pricing declines with it. So in terms of what's happening with home prices right now, the reality is nothing unusual is happening at all. On a national level, prices are definitely not crashing, but also not catapulting like they did this time last year. On the top line, everything looks normal. It's when we dig into the details that we see how exceptionally unusual this market is. Because today's home buyers are paying more than ever before for their homes. Redfin's now reporting that the average monthly mortgage payment has climbed to $2,538, the highest amount on record. And I've been telling you to keep your eyes on the mortgage payment metric because to a home buyer, this is the true cost of the home. Last year, as mortgage rates climbed faster than at any other period in US history, mortgage payments ping-ponged between $2,500 on the high end and $2,250 on the low end. There was a tug of war between rates pulling purchasing power down and desperate buyers bidding home prices back up that created this clearly defined band. And my forecast was that regardless of where rates went, the average mortgage payment would stay within this band for the rest of the year. Well, I hate to admit when I'm wrong, but I was, because over the last 2 months, the average mortgage payment has been unable to break below $2,500. $2,500 per month, which was the ceiling on mortgage payments, has become the new floor. Why? Well, last year was a record low year for inventory, and new listings are trailing last year's by 21.3%. And at the same time, buyers have acclimated to the new rate environment and are coming back to market. Last year, we saw a huge decline in demand, according to Redfin's Home Buyer Demand Index, as well as mortgage applications and other metrics. But since bottoming in November 2022, demand has been slowly returning. As a result, months' supply of unsold inventory has fallen from its winter peak of 4.5 months to 2.8 months, and appears to be holding quite steady. We still have nearly half of homes in America selling in less than 2 weeks. And the median days to sale is declining. Price drops are still elevated from historical norms at 5%, but I would expect this metric to decline in the coming months as the average sale price is climbing towards 100% of list price. Subscribe for more no BS housing market updates and check out this recent video to better understand how this crash is going to be completely different than the last one.